Old Mutual's investment boutique Omigsa has a new CEO from January the 1st next year. Diane Radley, currently Finance Director at Old Mutual South Africa, will take over as CEO of South Africa's largest private fund manager. She joins us now in studio. Diane, thanks very much for coming in this afternoon. Congratulations on the new appointment. And of course, you're going to be taking over at what could still be a very sensitive time for the markets. Do you think that we're going to see any changes between now and January, or do you think the volatility will still be with us?
I must admit, this morning when I was looking at the Aussie over the last 3 months, it did remind me a little bit of a mountain range, many ups and downs. And I think that volatility is going to be with us for some months to come. So not much is going to change between now and the end of the year. And I think some of my colleagues think I'm a little bit of a pessimist, in that I'm a bit of a double dipper, and I am rather nervous about the fact that markets potentially could have come off a little bit more than what we're seeing at the moment. But the volatility definitely, in my view, will persist over the next couple of months.
Talking about mountain ranges, I did read in your biography that you have climbed Kilimanjaro, so do you think the market's going to be as tough a summit to climb?
I think in hindsight, Kilimanjaro was probably a little bit easier, although at the time it didn't seem to appear so. But I think we're in for a tough time, and a lot of astute investment capability is going to come to the fore over the next couple of months.
Do you have that astute investment capability at Omigsa? I'm sure you're going to say yes.
I'm very confident that we do have that. And in fact, in terms of our multi-boutique structure, we have many various pockets of investment excellence that we see around the business. And clearly, in terms of portfolio management, I'm very much on the side of my boutiques.
Well, just looking at the boutique scenario you have at the moment compared to the old Mutual fund managers, how has that perhaps shifted focus on investment?
Stephen, if we go back a couple of years, maybe to the late 90s, where we were very much a large asset manager under the old OMAM structure, and we saw the asset managers not being accountable for anything specific and being remunerated in probably a fairly ad hoc way, I think we've come a long way. In the early 2000s, we took a very hard look and we did a lot of global research into what delivered best investment capability, and we came up with a boutique model. Very much the concept of co-ownership, co-accountability within those boutiques, portfolio managers responsible for the calls they take, backed by an extremely highly capable research team, and clearly a very focused bottom line approach in terms of being able to deliver investment excellence to our customers.
Well, of course, as the Finance Director of Old Mutual South Africa, you do have oversight over Omigsa to some extent. When you take over as CEO, do you envisage any changes? Are you happy with the way it's operating at the moment?
I'm very much of the view that investment excellence is delivered over a long-term period. And the boutiques were set up and had their first year of functionality or true functionality in 2007. At that time, we were quite internally focused in terms of how we developed them and grew them, and they're only 3 years down the line. So we're very much focused in terms of reviewing the decisions that were made, looking at the boutique capability and strategy, and how we take that forward. So going forward, just looking at how we would further develop that capability, it's very much a focus in terms of brand recognition. I think a lot of people still view Old Mutual Investment Group as a brand rather than the individual boutiques. And potentially only one like Future Growth, which was acquired after the boutique structure was established, is probably one of the key brands that stay out. So it's really to establish a brand strategy for the rest of the boutiques, focus on distribution and embedding distribution within those, and very clearly in terms of investment excellence. And to me, that's very much a long-term focus in terms of being able to deliver that.
Well, of course, Future Growth is one of those that has investment excellence. Do you look across the boutiques to find out where they are in the rankings, and do you take measures to make sure that they are at the top of those rankings?
We focus very much in terms of upper percentile delivery from an investment capability perspective. And I think one of the biggest challenges I'm going to have, and which the market will focus on with me going into the new role, is what view I take on underperforming boutiques. And do we focus very much on culling underperforming boutiques and seeding other investment capability to make sure that we stay at the top of the rankings? Or do we take a soft approach in terms of long-term delivery and give more time to boutiques in terms of capability and being able to prove their ability to deliver? I think this is going to be one of the biggest challenges I face in terms of taking the boutique structure to the next level.
You mentioned distribution. Of course, you're based currently in Johannesburg. We know that lots of the management team did move up to Johannesburg with Old Mutual, and Paul Hanratty, who's now moved further afield. And of course, Omigsa, most of those boutiques are in Cape Town. Do you think there's a problem with distribution with having Omigsa mostly in Cape Town? Does that affect distribution up in Johannesburg around the country?
I believe, looking at the new model that Old Mutual has established between Johannesburg and Cape Town, that there is true mobility in terms of individuals. And people do travel a lot. It's sometimes quite taxing. But in terms of distribution, I don't see it as a challenge in terms of different geographic regions. And talking about Paul Hanratty, he often used to say to me that asset management capability is best nurtured and developed in the Western Cape, where people are given time to think and ponder decisions before moving and acting on them.
You said you're a double dipper. Of course, we have seen markets respond quite favourably from March last year. They've settled back over the past couple of months. Do you think, though, that markets have gotten ahead of economic indicators and that we are in for this double dip?
Stephen, if you look coldly at some of the results that are coming out, a lot of the profitability or the recovery on profitability is very much driven in terms of business efficiencies rather than being driven by the top line. And I think the market has been slightly overly optimistic in terms of the sustainability of that profitability and the potential growth coming out of that. And until we see recovery on the top line, I think it's going to be difficult to sustain that and say there has been a true market recovery. You mentioned earlier that the retail statistics that came out showed consumer growth, and that is quite heartening from a market perspective. But I do believe we have some way to go before we see that translating into longer-term sustainable profitability.
And what should investors be doing in the meantime? I saw that some fund managers in the US are sitting up on up to 40% cash, so being very cautious at this point. Would you expect investors to remain quite cautious?
I do expect them to remain quite cautious. We in fact saw at the beginning of this year, when markets started to tick up, quite a significant move out of money market type funds into more equity funds. And I think people are going to be a little bit more cautious this time in terms of waiting to see. But I'm a firm believer in any investment is of a long-term nature, and sometimes it's better to ignore the market fundamentals and ignore what people are doing and avoid a little bit of the herd mentality in terms of approaching your investments. Make sure you're adequately diversified, you've addressed the risk, taken into account your position at that particular point in time, and rather look to the longer term than the short term. Otherwise, you're going to be climbing a lot of mountains and descending a lot of mountains in the next couple of months.
Diane, we have to leave it there. Thank you very much for coming in today.
Thank you, Stephen.
That's Diane Radley, Finance Director at Old Mutual South Africa, CEO designate for Omigsa, and that's from January next year.